Making smart financial choices in your 20 seconds can help set you up for long-term success. That includes creating a plan to pay off student loans, avoiding credit card debt, building an emergency fund, and working toward hitting bigger goals, like having enough money for a down payment on a house. Taking control of your finances at a young age, even if you feel cash-strapped in an entry-level job, will make it easier for you to achieve your goals in your 30 seconds and beyond. Select offers 6 smart money moves you should make in your 20 seconds to set yourself up for future financial success. Before starting, don't forget to like and subscribe to our channel for more future updates. So let's start. Number 1. Create a budget and stick to it. Creating a budget is an important financial step that can help you get your finances in order and track how much money comes in and out of your bank account every month. While it may seem like a lot of work to create a budget, there are numerous online resources and apps that can help you. Plus, once you have one, the majority of the work is done, and you can tweak it as your spending habits or income change. After you create a budget, it's important to stick to it. Regularly check in with your budgeting goals so you don't spend more than you can afford to repay. And if you share expenses with someone else, make sure you both have access to the budget and hold each other accountable. Number 2. Build a good credit score. Establishing a good credit score is key to qualifying for the best financial products, like credit cards and loans. Plus, the higher your credit score, the better terms you'll receive, which can save you thousands of dollars in interest in the long run. One of the catches of building credit is you need to have some credit history in order to qualify for a credit card. But it's hard to qualify for a card without any credit history. One option is to become an authorized user on a family member or friend's credit card. You could also consider applying for a secured card, which works the same as a regular credit card, but you're required to put down a deposit. There are also a few options that can help you raise your credit score without a credit card, like Experian Boost. This is a free feature that lets you link positive payment history for monthly utility, phone, and Netflix bills, potentially boosting your FICO score. Number 3. Set up an emergency fund. The smartest thing you can do in your 20 seconds is to start an emergency fund to pay for any unforeseen costs, including medical bills or auto repairs. You can avoid taking out a loan or carrying a balance on a credit card by using the money in your emergency fund, which can help you avoid paying interest. When you create an emergency fund, think about keeping the money in a high-yield savings account like the Ally Online Savings Account or the Marcus by Goldman Sachs High Yield Online Savings. These online accounts limit the number of times you can withdraw money without incurring fees to 6 per month, which may help minimize the temptation to do so for non-emergencies. Experts generally recommend putting 3 to 6 months of expenses into an emergency fund. But amid the coronavirus pandemic and high unemployment rates, some financial experts are offering more realistic advice about how much people should try to save. Instead, you should focus on saving as much as you can afford after covering necessary bills. It's okay to start with a smaller goal. Saving $20 a week adds up to $1,000 in a year, which is a good cushion to get you started. Number 4. Start saving for retirement. It's never too soon to start saving for retirement, and the earlier you start putting money toward your future, the more it can grow. When you get your first full-time job, your employer may offer a retirement account, such as 401, that you can open and deposit a percentage of every paycheck into each pay period. Many employers also match your contributions up to a certain percentage, which is a great way to maximize savings. As a general rule of thumb, opt to save at least a percentage that is equal to your employer's match. So if they match up to 6% of your contribution each paycheck, choose to transfer 6% or more to your 401 every pay period. While employer-sponsored retirement accounts are helpful, you don't have to wait until you have a full-time job to start saving for retirement. Roth IRAs are a great alternative to a 401, and you can set up recurring transfers from every paycheck so you never have a chance to miss the money. Number 5. Pay off debt. If you have a student loan or credit card debt, you should make paying it off a priority in your 20 seconds. Owing money to a lender has the potential to hurt your credit by increasing your utilization rate, which can result in a lower credit score. Lenders may also consider you a high-risk borrower if you have a large amount of debt, which may reduce your chances of qualifying for other financial products. And beyond affecting your credit score and qualification chances, you'll wind up paying a lot of money in interest charges the longer you carry debt. Take the time to make a clear debt repayment plan and stick to it. After you create a budget, consider how much money you can put toward your debt every month. Some experts recommend that 20% of your take-home pay should be earmarked for debt repayment and savings. If you want to pay your debt down faster, you might divert more of your income toward that goal. Number 6. Develop good money habits. While you're in your 20 seconds, consider ways you can build good money habits and be proactive with your finances. Get into the habit of regularly checking your different account balances. Avoid paying unnecessary monthly fees by switching to a no-fee checking account, like the Capital One 360 checking account, or earning a competitive interest rate with a high-yield savings account like Marcus by Goldman Sachs High Yield Online Savings. Make sure to spend within your means and avoid racking up unnecessary credit card debt and paying high interest charges. You can also consider optimizing the credit card you use and opening a card that has rewards tailored to your spending habits. There are hundreds of cards offering bonus rewards on groceries, gas, dining out, travel, and more. You may also want to consider a simple flat rate cashback card that earns you the same amount of rewards on every purchase, such as the CD Double Cash Card 2% cash back, 1% on all eligible purchases, and an additional 1% after you pay your credit card bill. This is it for today's video. What do you think of our video? Feel free to share your thoughts in the comments section below. Don't forget to like and subscribe to our channel for more future updates. Thanks for watching.